All right, so ladies and gentlemen, today I would like to talk to you about trade-based money laundering, or TBML. So first, I shall give an overview of what exactly trade-based money laundering is and how it works. Then I shall share a concrete example, and then finally I'll conclude my speech by talking about what is needed in the fight against TBML. So first of all, what is it? Trade-based money laundering is when criminals, such as traffickers, smugglers, organized crime groups, and others, take advantage of the complexities of global trade to disguise illicit funds as legitimate ones and move them across borders. So, aside from just funding their criminal activity, criminals might use trade-based money laundering to thwart sanctions. For instance, we've seen examples with Russian oligarchs and sanctions against North Korea. They might use TBML to evade taxes and customs duties. They might use TBML to avoid capital controls. And finally, they might use TBML to illegitimately claim tax incentives. So that's the what and kind of the why. But what about the how? How does TBML happen? So first, uh, one method is falsified trade documentation. So criminals take advantage of the systems that are meant to combat money laundering, such as the use of trade documents such as invoices, customs declarations, and shipping receipts. So essentially, they falsify them to misrepresent the quality or the type of goods or the value that they're trading. And this is a more specific example would be trade mis-invoicing, which is when criminals intentionally misrepresent the value or volume of goods in a transaction by either over-invoicing or under-invoicing. So what does that mean exactly? So let's say there's an exporter who has goods that they're going to send to the importer. The goods are worth at market value $2 million. That's how much they're worth. But the exporter invoices the goods for $1 million. So this allows the exporter to transfer the value to the importer. Why? Because the importer will pay $1 million to the exporter for the goods, but then they can sell the goods for the fair market price at 2 million, and then they can pocket the difference of $1 million. So that difference is how these criminal actors move funds around. There's also the example of over and under shipment, where exporters or importers, well, the exporters ship more or less goods than what is represented on the shipping and customs documents. And a very extreme example of that is what is called phantom shipments, when all the paperwork is there, but there are actually no goods that are shipped. There's also the example of multiple invoicing. In this example, the money launderer might issue more than one invoice of the same trade transaction. This allows them to justify multiple payments for the same shipment. And if they're caught, they can give an excuse like they needed to change the payment terms or they needed to pay late fees. And so you might be wondering, how is all of this possible? How can nobody catch that this is going on? And the reason is because many of these trade transactions happen through open account transactions. And actually, let me quickly take a minute to share my screen just to explain to you open account transactions. So if you look at the picture, what's in red is kind of explains what I said before. The exporter selling the goods to the importer, but with the invoicing less than what the actual value of the goods is. So that's kind of that example, and the blue explains what the bank, or the blue, you can kind of see what the bank is doing. So basically, in an open account transaction, the buyer and the seller know what's going on. They know what they're selling. They know how much it's going to be. They know all of the trade details. The banks do not. The only role that banks play in open account transactions is to wire the money. They don't see the invoice or the description of goods or any of the trade documents. So that is sort of important for explaining why, and I'll stop sharing. That's important for explaining how banks are fighting TBML. So basically, banks are fighting TBML by using anti-money laundering regulations, or AML. So they use these regulations, which include performing due diligence to ensure that they know who their customers are and have a good idea of what their expected business and transaction patterns are. And they also need to, when they get a new client, they need to cross-reference them with any sanctions or watch lists. And I think all of this is known as know your customer. So essentially, banks need to know their clients and kind of know if what their expected business should be for what they are representing. They also use surveillance and other means to identify and investigate potential red flags. And they also provide training and awareness programs for their employees. But unfortunately, as I said, there's not much that banks can do because banks are only really involved in about 20% of cases. The other 80% are these open account transactions. And as you saw, banks don't really play a big role in that. Of course, there are other entities that are combating TBML, such as customs authorities and law enforcement agencies, and organizations such as the Wolfsburg Group, the International Chamber of Commerce, the Bankers Association for Finance and Trade, or BAFT. And these three organizations, the Wolfsburg Group, the International Chamber of Commerce, and the Bankers Association for Finance and Trade, published a joint recommendation against TBML in 2017. But despite all of these actors fighting against TBML, it's extremely difficult to combat, and there's no real easy solution. And so, just quickly, I sort of explained how it works, the why, what, all of that. But now I want to talk about an example. Or I think it's a relatively well-known example. It's called the black market peso exchange case. And so let's travel back to the early 1980s. So organized crime groups at the time, especially drug traffickers and all that, they were facing they're increasingly strict financial regulations on banks that ensured that they enforced money laundering laws and suspicious transaction requirements. Sorry about that. Excuse me. And so these organized crime groups started to use the black market peso exchange to launder their money. So what is the black market peso exchange? It is a black market that already existed that Colombian businessmen were using because Colombian currency controls and tax laws were extremely strict. And so they're using the black market peso exchange because it was just easier to use. And so the drug cartels started taking advantage of this thing that already existed. And it was so successful that according to Fanny Kurtzman, the former chief of Colombian Customs, the black market peso exchange laundered almost $5 million of drug money a year for traffickers. So let me just tell you a bit how it works. Essentially, a money broker in the US would get a call from a Colombian trafficker who wants to negotiate a more favorable exchange rate, let's say 40% below the official exchange rate for US dollars and pesos. After agreeing to a price, the drug trafficker would drop off the money they earned from drug trafficking and all that at either the money broker's office or another location. The money broker would then process the cash, they would take it, and then they would have a lot of their runners take the cash and deposit it in hundreds of US bank accounts. Once the money was in the bank, it was easily moved. So the important thing is that the money broker also has an office in Colombia. And so they would make currency deals with legitimate Colombian businessmen who wanted cheap US dollars to purchase goods such as cigarettes, liquor, dishwashers, etc. So in the US, or they wanted to purchase these goods in the US. So the businessmen would also fix a favorable exchange rate, but this time it would be more about 20% below the official exchange rate. They would pay in pesos in Colombia to the money broker, and then the money broker would wire transfer or deposit the money that's already in those US bank accounts to to legitimate companies in the US in exchange for goods. And so essentially the money from the traffickers would go to legitimate businessmen, and the pesos from the businessmen to reimburse the money broker would go to the drug traffickers in Colombia. And of course, the money broker gets a commission. So I hope this speech gave you an idea of just how complex trade-based money laundering is and how difficult it is to fight. As I said, the global trade is very complex. It has multiple jurisdictions, multiple stakeholders, just shippers, airlines, truckers, ports, customs authorities, business banks, and law enforcement agencies. And also the fact that the banks only play a limited role in the majority of trade transactions also plays a role. So essentially, combating TBML would require greater collaboration between the public and private sector, more transparency in trade transactions so that customs authorities and law enforcement would have an easier time identifying suspicious transactions, and a greater cooperation between countries. And I know I'm probably at the end, but I want to quickly add some news I saw recently. And while I haven't really looked too far into it, but I saw recently that the UN is expected to finalize a draft convention on negotiable cargo documents. And essentially, according to their words, this would bring us closer to a world where all stakeholders in the global supply chains can work with the same set of reliable data, among other things that it would do. So essentially, I just really hope that this will have a positive impact on the fight against TBML. Thank you for listening to my speech.